Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York. It is Tuesday, 10th day of November, 2015, and this is the Daily Report for Gold and Silver. We have a continuation after a short little hiatus yesterday in which we had a small pop in the market of lower pricing, currently trading at 1087.20, puts it off about $1 on the day with a low of 84 even and a high of 94. So once again, we have a very, very tight trading range, roughly $10. When we look at silver, silver is still in a free fall, down about 15 cents, over 1% on the day, 1440. It's traded to a low of 32 and a high of 59.50. So you can see quite a large difference in terms of the actual range on the day. We'll look at silver in a little bit. Let's look at a couple of gold charts first. Traders, any way you want to look at it, the market is still under dramatic pressure. And as we pointed out yesterday, when we take a look at the most recent trading activity, since this market has been to 1191, we've had this market in a fairly steep decline and then a genuinely steep decline. Out of these last trading days, which amounts to about 19 trading days or about 4 weeks, we have really genuinely only seen this marketplace close higher on 3 occasions, one being yesterday. And each time it closed higher, it didn't do it with any kind of conviction. In fact, what we saw in the marketplace following any kind of a up day was a decline day of a sizable amount up till today. But if you look, for example, on this day, our first up day right here, followed by a pretty dramatic decline. This up day followed by a pretty dramatic decline. And finally, when we look at the up day yesterday, just a slight up day, we're not getting a very, very strong decline. Now, the reason I believe that to be evident in the case is that if we take a look at what we saw back in July when the market was in a real congestion area, we really had, and of course we've got a couple of highs above here and at least one low below here. But if we look at the band, and we talked about this a little bit yesterday, between $1080 and $1100 per ounce, this area right here, last time we hit this area, of course, we had a pretty sizable consolidation, and it was just preceding a nice move to the upside, a nice rally. From there, when the market came down, it actually tested but found support at 1100. Here, tested and found support just above it. I believe that this print right here was about 1103 or 1104, somewhere in that area. So we absolutely, I believe, still had, at this point, solid support at 1100, and that of course was up until the point when we broke below it. Now, once below it, I think that we will still see solid support at 1080, and the market is really what, $7 off of that point. So what I believe we will probably see is a period of consolidation similar to the period of consolidation that we saw back in July. In other words, we had a series of days in which the market genuinely traded in between these 2 points, meaning about 1100 and 1080. Now, that was also when we hit this historical low, and I call it a historical low because it is the lowest price that gold has been at ever since trading in 1900. That's this particular mark here at 1071. So now that we're back within that area, meaning 1100 on the high side and 1080 on the low side, I believe that this market will once again go into a consolidating period in which we'll see the market genuinely, whether it's trading up or down on the day. I believe that what we're going to see is it trading within this range for a while, and then from that point, I believe it will have found support and begin to trade back higher. Now, how long might that take? That's something I really do not know in terms of a time period. But what I can tell you is I believe that we're in an area, not an area where it's going to bounce and move, or bounce and continue and make new lows, meaning go below 1080, 1071, these areas here. But I do believe that we will see this market consolidate, and it will consolidate prior to forming a base, and that base will be the lows that we see before beginning to move back up. So traders, we're currently looking at a daily chart. Again, this is of course, of COMEX Gold, but it is in a Japanese average format. And what we are seeing is, think about the market yesterday in which we had a slight uptick, but when we looked at the Japanese average charts, it still was a fairly large body. Of course, we've had this consistent absence of upper wicks. We've had a strong downtrend that really hasn't relinquished any kind of strength. That is up till now. When we look at today's candle, you can see that although we do have the upper wick, body size has genuinely begun to decline, diminish, any way you want to look at it. And so now as we get in this particular area, these lows right in here, as I said, my sense is we might see a scenario similar to what we saw right here, in which as the market bottomed, we saw consistent smaller and smaller spaces or distance between the midpoint, which is what is pegged as the open, and the close of the market, or the end of this candle on a daily chart, until it goes green. We could also see something like this, which is the area of consolidation in the market, where you get very, very small bodied candles and alternating colors in some cases, or as in here, a majority of red until it goes green right in here. But nonetheless, these body sizes really decrease in size, and when they do that, that is telling us that in fact we could have found some kind of a bottom in the market. Lastly, I want to take a look at a weekly chart, and of course the weekly chart on Tuesday doesn't give us a lot of information, but I'm very curious to see what we're going to see. Right now we have made very slightly a lower low on the week. It's still a very small bodied candle. We haven't had much range whatsoever. And so the type of candles that we will look for, especially on the longer term weeklies, tend to be these doji candles, and they're more significant on a weekly chart than a daily chart, because what that tells us is that when we compare Monday's open to Friday's close, a long 5-day stretch in time when there's very little change in the market, that really shows you that we've got a real consolidation going on. For example, what happened back towards the end of July, beginning of August, right in here, in which the market came down from a high of about 1220 down to these record lows right in here. That's at 1071 here. And that was followed by 2 weeks of consolidation before we had our first rally. That rally took us to a 60 and change, came back down, found support at 1100, and then came up to make a higher high. So the real question is, will we see this market somehow find support in this area? Because we haven't made a lower low than the last low, although once we retrace this much, we're really not looking at any real bullish models anymore. We can't unless this market finds support and moves back up, and then we can say it moved back into a bullish mode. But bullish models don't work when you've got retracements that really go past the 78% retracement point, retracement of the prior rally. And we certainly are getting that. You've got an extremely lower low when you compare it to this low in here. So for that reason, we want to see if the market's going to consolidate. We are going to be sidelined. We're going to await some sort of technical confirmation that we're either going to break below these lows or form a base and then move back up. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Wednesday for another daily update and review. Bye-bye.